Our EPS for the quarter was $0.06 compared with $0.05 last quarter. We have completed the acquisition of Lodestone and the integration is going very well. The growth this quarter has been broad-based. We have added 53 new clients this quarter. Our growth this quarter predominantly came from the non-top 10 clients. Our growth has been, as I said, all around. If you look at from an offering perspective, in the business and IT space, we closed 8 large deals amounting to $700 million this quarter. The consulting and system integration grew by 15% quarter on quarter, including Lodestone this quarter. Products and platform space also has done very well. They added close to more than $100 million of TCV this quarter. The TCV booked under products and platform is $600 million, and this does not include Lodestone. This do not include Finacle. Now, pricing has been stable. The pricing has gone up by 1.8% this quarter. The volume went up by 1.5% this quarter. And the pricing change is predominantly because of the portfolio shift. Because our consulting and system integration grew by 15%, there is a shift in portfolio. And that has resulted in our revenue productivity going up by 1.8%. So as I said, the growth has been all around, broad-based. Now, in the middle of the quarter, we had seen some headwinds. We had seen headwinds due to a Superstorm Sandy, because of which our people were out of the office for 1 to 2 weeks, actually, during that period, predominantly in the eastern part of U.S. We had also seen extended furloughs and unexpected furloughs, both, because we know that there will be some furloughs in Q3. But in the middle of the quarter, we had seen extended furloughs as well as additional ones, new ones, which we had not expected in the beginning of the quarter. Irrespective of that, our people have worked extremely hard. And our relationship, the strong relationship we have with our clients also helped us to mitigate these headwinds. So if I look at Q3, in my mind, it is a culmination of multiple things. Number one, I think, is execution of our strategy over the last couple of quarters. For example, last quarter we had 8 transformational wins, and some of them have actually yielded revenues this quarter. In our case, if it's a large transformational win, it takes maybe 1 to 2 quarters, and if a large business and IT operations win, maybe 2 to 3 quarters for the revenue to flow into the system. So we have benefited from some of the deal wins which we had. We have benefited from some of the, from the execution of the strategies over the last 2 or 3 quarters. That's number one. Number two, our people have worked extremely hard. It is a challenging environment. We had headwinds in the middle of the quarter. We mitigated those. That shows the commitment, the hard work, and the focus our people have put during this period. So our people have worked extremely hard to achieve these results, and because of that, we have performed well this quarter. Now, it is equally important to remember that the world has not changed in the last 90 days. The world continues to be volatile. US and Europe, they both have its own issues. And our clients, those issues do impact our clients' ability to take decisions, ability to do long-term investments, ability to even, in some cases, ramp up deals which are already closed. So the environment continues to be volatile. The environment continues to be challenging for our clients. We have not revised the guidance for the year. The guidance for the year was 5%, which implied a growth rate of 3.7% in Q3 and 3.7% in Q4. We grew by 4.2% organic in Q3. Because of that, the implied growth in Q4 will be 2.7%. Now, in the beginning of the quarter, our visibility for the quarter is about 95%. So, right now we have probably between 95 to 97% visibility. We still have 3% to catch up, which is not a small number on a base of $1.8 billion. So we remain cautiously optimistic. We continue to hold our guidance at 5%, and we remain cautiously optimistic.